Good morning. This is George Tkaczuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Okay, let's talk about the equity markets. Here we are, last day of September, and it's been a pretty good September. And if you recall, most pundits were telling us how bad September was going to be because that's the worst month for the market the whole year. But as I always say, if you watch price and volume, that shouldn't deter you or shouldn't take your eye off what's going on in the markets. Price and volume will always guide you. So the market's still in a confirmed uptrend. Had a little bit of a gap down sell-off this morning. However, it looks like the market's coming back. And of course, anything can happen. We'll continue to monitor that. If you look at the NASDAQ markets, that's the strongest market right now. It's meeting resistance at that 3,800 level. If the NASDAQ can break through that 3,800 level on volume, it tells us this uptrend will continue for some time. The S&P and the Dow are struggling a little bit. This morning, the S&P undercut its 50-day moving average, which is at about 1680. It undercut it by a few points, but as we speak right now, it's up back above this. So it looks like the market wants it to continue to go higher. And the reason too is while we look at the general indexes, you also want to take a look at what are the leading growth stocks doing. And some of these stocks, these are the ones I've talked about over the last few months, weeks here on this show. Those would be in the biotech sector, stocks like Celgene, Biogen, Regeneron. Those stocks continue to lead and make new highs. You have your internet stocks like Facebook, LinkedIn, Netflix, Tesla, a car stock, also continues to make new highs. So not until you start seeing cracks in those sectors and in those stocks will we know that we're possibly spilling over back into a downtrend. So for now, the strength still is in technology, software, biotech, internet. Fiber optic stocks are doing very well. So keep your eyes on those. Now, there is some weakness still going on in the financials. We look at XLF, that's still struggling. And the home builders look like they might have found the bottom, but they're still pretty much in the downtrend. So as we go forward, I just want to tell you about one stock you should put on your watch list. That's Ulta Salons. That symbol is ULTA. And the reason I like Ulta is they're a chain of cosmetic stores. They're a hair salon. They have anti-aging creams, everything that a woman would want. Now, they have about a little over 600 stores in the U.S. They hope to have about 675 stores by the end of the year. And many analysts believe that they can expand out to 1,200 stores over the next few years. And what they're doing is, why they're doing well, is they're stealing market shares away from department stores. This is with their products and the way they set up their boutiques, so this is what makes them popular. Now, why I like them is for 17 quarters, they have double-digit earnings growth. And last quarter, they surprised with a 30% increase in earnings. And revenues came in a 25% increase, and again, that was a surprise. And it gapped out of what was pretty much of a close to 2-year consolidation where the stock traded between $100 and $80. Then it had a break below the $80 level, shook everyone out. And then about a few weeks ago on earnings, it gapped up to about $120. Now what it is, it's formed a 3 weeks tight pattern. And what that means is the weekly closes were within 1% of each week. So if Ulta can move out of this little tight pattern and take out the high at 121, that would be a good buy point. And of course, if it were to trade down and take out the 112 area, which is the bottom of the gap up day, then it's telling us that the trade might not work. And analysts going forward are looking for a 25% increase in earnings for 2014 and another 25% in 2015. So as like always, let price and volume be your guide. Expect a little volatility this week because of the shenanigans in Washington. But as always, have a great trading week. This is George Tkaczuk, RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago.